checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Yo, what is going on, y'all? J Trades here, back in a brand new video. And in today's video, I'm going to be showing you guys different ways on how you guys can effectively manage your trades to max out your risk reward as much as possible, squeezing in the most profits out of all your winning trades. In this way, it will put less pressure on you to win every single trade, for example. So without further ado, let's jump straight into it. So basically in today's video, I'm just going to go over multiple trades that I've personally taken and also signaled to the group chat. So if you guys are interested in signals, I have a link down below where you guys can find out that, as well as a course. But without further ado, let's jump straight into it. So here is a trade on Monday, August 7th. So let me jump straight into this on the 1 minute time frame. Actually, you know, we'll start on the 5 minute time frame. Okay, I usually like to annotate my a lot of my trades now on the chart just so I can look back to sometimes as reference. But explain this trade real quick. Essentially what I found was, okay, we were in a downtrend, right? But we have a very big push here that essentially was caused by this supply right here. Okay, very strong supply move we had first time. So right when New York session opened, 9:30-ish for gold, we basically tapped into it. We actually wicked out a bit as a liquidity sweep of this zone, and then we pushed down, breaking these lows right here. As you can see, we broke past these lows right here, which can be considered a trendline liquidity a little bit, not insane trendline liquidity, but a little bit. And I would ignore this wick right here because that is most likely caused by news or something insane. But basically in this trade, I was looking to actually play this rebalance of pricing for price to come back and rebalance out before we have more stronger moves pushing to the downside. So for this trade, again, I wrote out all my confluences right here. We have a high time frame demand zone, which is this blue box right here. I've drawn out on the high time frame. And again, this is stuff I go in my course in depth on how you guys can draw these high time frame zones properly and not the improper ways. So we have a high time frame demand zone, and we also have a liquidity sweep. Now, a lot of people would say, yes, we do have the most obvious liquidity sweep would be right here, these lows right here that causes pretty big push up right here. But sometimes we have these micro sweeps that happen, and these micro sweeps are mostly found on the 1 minute. So I interchange between the 1 minute and 5 minute for most of my entries, and my high time frame analysis would be obviously daily, 4 hour, 1 hour, 30 minute, 15 minute. But aside from that, again, I was looking for this extreme low liquidity right here to be taken out at some point, but it might not necessarily be taken out now, considering time frame is already 12 o'clock p.m. for gold, so gold won't move as much. But for this trade, we would have to jump down basically into a lower time frame. Okay, so if I jump down on the 1 minute, and let's go back to August 7th right here. Okay, let's see what we see right here. Okay, so basically what I saw is liquidity, right? We have a lot of liquidity standing right here, and one of my major things about my trading plan is liquidity sweeps. We need to be sweeping some form of lows or strong moves up. This is basically what you guys can call an order block if you want. Very strong move to the upside right here, and we have liquidity right here resting here, showing that there are a lot of buyers right here, and institutions love to move price, so we take out these buyers before. Are you a day trader looking to get funded with 6 figures of capital or wanting to become a full-time profitable day trader? Well, look no further. At ETU Essential Traders University, that is exactly our main goal. We're here to teach traders of all skill levels the understanding and skills needed to become profitable in these markets, and we also offer many different services like a full comprehensive day trading course that goes over A to Z on everything you need to become a successful trader, as well as a premium Discord membership that gives you access to our private community of traders and day trading signals. If you're really dedicated to mastering this craft, we also offer one-on-one private mentorship lessons for those looking to speed up their profitability to journey, and as well as answer any specific trading related questions that they are facing. So now visit essentialtradersuniversity.com to enroll in the day trading course and secure your spot in our premium membership community. Let's embark on this exciting journey together and make every trade count. And I'll catch you on the trading floor for moving back up again. So you guys can see I have this 1 minute liquidity marked out right here after analyzing the higher time frame. We have this liquidity as well. We have this liquidity right here, kind of equal lows right here in this section. So this would be an area of liquidity. But I noticed I'm going to be reacting to the first liquidity and see how price reacts. So what happened to here was basically price, we swept. Okay, we closed a little bit below, but then we have this very nice wick rejection candle right here. I'm not entering here, mainly due to the fact that knowing we have more liquidity resting right underneath, so I'm not going to take that impulsive trade. I'm going to wait for more confirmation, which would be shown as a break of structure. So we basically broke structure right here. We basically broke structure right here, okay? Pushing to the upside. Now a major break of structure will be up here, but personally, I'm not a fan of waiting for that much price movement. I like to get these sniper entries. So we had a mini break of structure right here, along with displacement, which is one of the most important parts. We had a break of structure with displacement. This is a very nice displacement candle, meaning it moved a lot. Okay, this is a very big candle with displacement that also created a fair value gap and imbalance right here. Okay, so let me just remove this for a quick second right here because this is in the way. But we created this big imbalance right here with a displacement candle. And that what that means is instead of me entering right here off this displacement candle, I like to get better entries. Okay, better entries means better risk reward. And honestly, even half of a candle that big for this displacement candle, which is like 10 pips roughly, you can get a much better entry with a tighter stop loss, right? So I was waiting for price to basically retrace back into this area of imbalance caused by this displacement candle. And what we found here is we have a fair value gap right here, right? But we also have a balanced price range, which is when fair value gaps overlap from a bearish and a bullish candle or vice versa. We have a balanced price range right here. So I'm gonna mark out this balanced price range. I'm entering roughly around 50% equilibrium of the fair value gap. Now, some people enter right immediately, but it really depends, right? For me, I like to enter around 50%. So we tapped exactly on the dot, 50%. I had, I believe, a limit order right here that I set, and that was my entry. And for the exit, I had my stop loss right below this candle that created the displacement. Again, I don't have my stop loss right underneath this far, mainly because I've done tons of back testing and realized most times it does not go that far after a displacement candle. So there is that. That's my entry and my targets. Okay, this is the extremely important part of trading. Okay, we want to have a solid mechanical system as much as possible. We want to make it as mechanical as possible. This way we can get rid of emotional decisions we make during trading, as well as making sure we have consistent results, right? So for take profits, what I like to do is I usually have 3 take profit levels. Okay, this depends on trade to trade, the time of day, many factors, but typically 3 take profit levels, and that is max. Okay, maximum 3 take profit levels. After my 3 take profit levels, once the first one is hit, now this depends a lot. The first take profit level is the most important part about managing a trade for me. For a first take profit, usually this is very situational. Depends how much price has moved, how much the range is on the price. But for me, usually I move my stop loss to break even. Not always. Okay, it really depends on whether we have more areas of imbalance that need to be mitigated before we continue pushing in my favor. Second TP, I usually start trailing my stop loss. Okay, this again also depends. A lot of this stuff is situational, depending on intuition and seeing how price forms, right? The structure that price forms, the momentum, a lot of things like that we need to take into consideration. And third TP, just final TP at opposing liquidity, for example, or internal. This could be either internal liquidity or external. Okay, so that is my personal trading plan. Again, everyone has different ways of managing the trades, but this is what I found from backtesting that works the best, maintaining that good win rate along with maintaining a solid risk reward ratio. So now when it comes to taking profits, what we want to do is we either take profits at key levels or imbalances. When I say key levels, I'm talking about liquidity, okay, and strong highs or lows. So for example, right here, I usually like to go on the 5-minute for take profit levels. For example, let's just give this trading example. Right here would be my first take profit right here, okay? And the reason why is because this is an area of, this is like a liquidity area basically. So TP right here, we have liquidity resting right here, okay, that had a very strong move pushing down. This is a high that we need to be breaking. Since we are expecting price to push up, that means we need to break previous highs, okay? So breaking more and more market structure. So this is gonna be my first take profit. My second take profit is gonna be, again, at another area of imbalance, whether that's a fair value gap or balanced price range, BPR, or another area of liquidity. So for me personally, the second most obvious area of liquidity is right here. Okay, another thing we want to take into consideration is it's 12 o'clock p.m. Gold does not move as much after 11:30. Therefore, we don't want to be having insane targets, for example, targeting here as our take profit 1 or targeting all these highs, especially because we are bearish, right? We need to take into consideration the high time frame and everything along with the trade. That'll be my second take profit right here. And my final take profit is this area right here that I found. So right here, as you guys can see on the 5-minute, we have a fair value gap of imbalance right here, okay? The reason why I didn't have my target this big, because it's a pretty big area of target, as you can see. We want to make sure our target is as concise as possible. What I found is we have a balanced price range, again, sitting inside here, okay? Within this fair value gap, we have an inverse fair value gap over here, opposing fair value gap, acting as our balanced price range. So we are going to be using this smaller fair value gap as our target. So once the top, or once this fair value gap here gets hit, as you can see, it's a much better target. That's going to be where I fully exit out the trade. So there it is. First take profit, second take profit, third take profit. Either, again, all these take profits are either at external liquidity, which means obvious highs and lows, creating a strong move, market structure, or internal liquidity, which is internal imbalances like fair value gaps. So that's my final take profit, and that's how I personally manage my trades. Okay, you guys can backtest this for yourself and see what works best for your strategy, because not everyone's strategy is the same. Okay, everyone has different strategies. Now, if we go over for like example, another trade, this is a trade I took in an Asian session. So we are not expecting big moves during an Asian session, much smaller moves, as you can see. Okay, we are expecting, of course, I was expecting these liquidity areas right here, this level, to be taken out at some point. We took these out, we wicked below, took it out, and I found a good entry right here. Could have had a better entry, but this is an Asian session, so I didn't really care too much. But for example, knowing that we have time on our hands, okay, we need to understand the time that we're trading. That's giving context to our trades. And based on the time we're trading, for this particular trade, I only had one take profit, which is roughly around this zone right here. Okay, we had a very strong supply zone right here. That's basically where I'm going to be roughly taking all my take profits. And the reason why is because, again, higher time frame, we are bearish. And last but not least, this is Asian session. We are not expecting big moves. So my legit final take profit would be roughly around these areas, these highs right here, and that'll be it. I'll be fully exiting trade, not holding any runners, mainly due to this is low this is low volatility, right? So that's what I did for this trade. So again, every trade is different. Some trades you're gonna have 3 take profits, some trades you're gonna have 2, some trades only have 1. It's all situational and things you have to react on the spot. Okay, main thing is what time you're trading, what asset you're trading, understanding how this asset moves, and looking at momentum of the trade. So after these things, you will determine roughly how many take profits you should have. So for example, for this trade, this had clearly 3 take profit levels that we could potentially reject from. That's why I had 3 right here. I don't go over 3, mainly due to that complicating trading way too much. We don't want to complicate trading way too much and doing too much, okay? We want to make sure our system is as good as possible. And generally for me, my rule is my first take profit must be at least 1 to 2. Usually, again, this does vary trade to trade, but most of the times my first take profit should be roughly 1 to 2. And that's what I found from my trading system. Most of my trades run 1 to 4. So 1 to 2 as a first take profit is very good, with the stop loss then breaking even, having a risk-free trade. So basically what you guys want to do is personally backtest your own trading system and see what take profit levels, how you manage your trades, when to move your stop loss to break even, things like this that works the best for you, okay? And see the profit factor, see your win rate, see your average risk reward. You want to make sure the numbers on the mathematical things are on your side. Not only that, you also want to see many other factors like psychology. Can you manage this type of trading style, okay? So there's many things that incorporate into a person's trading system, how they manage a trade. Personally, I believe it's a lot up to the person, because everyone has a different personality and, again, trading setup. So again, thank you guys so much for watching. Again, if you guys are interested in checking out the course or joining the group Discord down below, which is free, along with the premium signals, make sure to click the link down below, and I'll see you guys in the next video. Peace.